And there's flexibility, at least at Citi.
Yeah, exactly. All right, we're going to continue our coverage here at Stanford. You are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and you are listening.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are off the session highs. Even so, the S&P on track for a gain this week of 1.8%. Right now, the S&P up 32, higher by 0.7%. The Dow up 367, up 1%. NASDAQ up 66, up by 0.5%. Stock traders piling into companies that are more likely to benefit from a rebound in economic growth. 10-year down 18.30 seconds. 10-year yield right now 1.57%. Gold down $28 the ounce, down 1.6%. Again, recapping, S&P up now by 0.7%. An update on Wall Street. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, we want to welcome our viewers on Bloomberg Television joining us, also watching on YouTube, and of course listening to us on Bloomberg Radio. Carol Master along with Tim Stanovic here at the Stanford Graduate School of Business. We've got a really special guest. We're talking about Carlos Brito. He was longtime CEO of AB InBev. He's class of 1989 at Stanford, and he joins us via Zoom. Brito, it's so nice to have you here with us. How are you?
Very good. How's it going? How's out there in California?
It's really nice out here in
Sunny.
California.
It's a really sunny day.
Hey, listen, talk to us about, first of all, your tenure as CEO at AB InBev, long time. You really transformed that company into the largest beer maker in the world. A lot of acquisitions, big acquisitions. Tell us about the beer industry right now. Where do you think it goes from here? What are some of the challenges that are facing the industry right now? Really key challenges.
Sure. I mean, we built AB InBev in a global brewer it is today. I was very lucky to be part of a very talented team. We did it all together, and we started in one country in Latin America, one country in Europe, and we became a global company with presence in all continents. And in terms of trends, I mean, the beer industry continues to be very healthy. I mean, consumers continue to premiumize, to trade up, to pay more for beer. That's very good. Consumers continue to look for opportunities to engage with beer, and they had to go to their homes when bars and pubs were closed, but they were very connected to our brands. Big brands did very well during COVID. Global brands also did very well, continue to grow. So the beer industry went from a local business to more of a global brand type business. Innovation continues to play a big role in beer. And, being a natural product that's made of natural ingredients through a natural process, which is fermentation, the same way you use for wine or make bread. It has a clean label, which consumers favor a lot these days. And we offer a portfolio that goes from, full beer all the way to 0.0 beer. So the whole thing about moderation. And so these are some of the trends we see. Great industry to be in. In terms of challenges, to your question, I think like every business you read in the paper every day, it's about supply chain being very, tough, inflation, it creeping up, and also some, still for beer, some countries where travel is yet restricted. And our business has a lot to do with entertainment, with consumers moving, people having fun, and this is still restricted in many parts of the world.
If you were still at the helm of the company, Brito, how would you navigate these supply chain challenges right now? What would you be doing to ensure that you can keep costs down when so many costs of raw materials like aluminum are continuing to move higher?
Yeah, I mean, we've always been a very efficient brewer. We are a high-quality brewer with very high efficiency, ABI I'm talking about. And commodities, of course, there's not much you can do. ABI has a hedging program, a 12-month hedging program, so that is the time to react, to plan, and everything else we try to be as efficient as we can, so we can also have less impact on the environment. So we try to use water the best way we can, farming products the most efficient way we can, so we can have high quality with the least impact on the world that surrounds us.
You're talking about the future. What are the trends that you think are coming this way? Is it more non-alcoholic? I know Tim likes that. Hard seltzers, fad? How do you see it? Does that stay around? Consumer tastes can change pretty quickly.
Yeah, I mean, there are many trends that were there before COVID, and COVID made some of them escalate or progress even faster. But some of the trends were clear. During COVID, people rediscovered the home and way to entertain at home. Consumers continue to be, trading up, as I was saying before. They continue to consume more beverages with meals, which for beer is something new. For soft drinks has always been the case, but for beer, because of the home as a hub, became more of the case. Consumers continue to look for alternatives in terms of health and wellness, and that's where seltzer plays a role. Less carbs, less calories, less bloating. And clean labels remains a big priority, and convenience. Consumers and retailers became very usual to interact with companies via apps and have things delivered to them. And that during COVID, as we all know, was the name of the game. In B2B and B2C, the rate of adoption went up big time during last year, 2020.
But is hard seltzer one of those trends that consumers, one of those healthier trends that consumers will continue to move toward, especially consumers here in the United States? And I got to ask because just last month, Boston Beer withdrew its guidance over softness in the hard seltzer market. So again, are you seeing hard seltzer as a fad, and Americans are going to move past it?
Yeah, I mean, seltzer was a very strong product in the last 2 summers. Now it's leveled off a little bit. And because innovation is so strong in the beer category and adjacent categories, we'll continue to have every year new products that will come and capture consumers' imagination. So consumer insights is a big thing in our business, trying to understand what consumers are looking for and providing them with those experiences. That's what's make ABI successful.
Hey, Brito, one thing we want to ask you, as we said, 15 years as CEO of the company, from what I understand, from what Tim and I have been reading, is that you've got a lot of people calling you about your next act. What are people calling you about? What kinds of offers? What might be your second act? Might it be running another beverage company?
Yeah, you're right. I mean, when I sat down on June 30th, people called me even before that when it became public as I was stepping down. And with ideas, with things we could do together. And I said, hey, I don't have time now. I'll call you in July, August, September time frame. That's what I've been doing. And it's interesting because for the first time after 32 years in the same industry, an industry that was always exciting, changing, and consolidating and becoming global. So there was never a bored moment there. There was never boredom. It was always very exciting. But now I've had the time and flexibility to really go deep in many different businesses. And I'm meeting very interesting people, learning about amazing business that I knew because I was reading the paper, but I didn't know much about them. I have the time to go deep. And I want to make a decision the next couple months. I have a couple of things that are now, becoming more and more interesting in terms of ideas. But right now, I still haven't made a decision yet.
What industries are they in, and can you tell us who you've been talking to? Can you give us any hints?
And just got about 20 seconds here.
Well, my filter is very simple. I want to work with people that I admire, respect, with values that are the same as mine, in a place where I can have an impact. Those are the people I'm talking to.
All right. Looking forward to the news on that. And Carlos Brito, thank you so much. Brito, thanks for stopping by and joining us here. Carlos Brito, of course, former chief executive of AB InBev, joining us via Zoom. This is Bloomberg. All right, you are listening to Bloomberg Business Week. Carol Masser, along with Tim Stanovic, and an interesting interview with Brito there. It will be fun to see what his next act, because he transformed that industry. Massive acquisition of SAB Miller, and that really changed that company and made it such a major player in the industry.
Yeah, and he's made no secret of his desire to keep working. A Financial Times article from years ago said that he had, apart from work and family, he had no hobbies. And he talked about the fact that his dad worked until very late in his life, and he wants to do the same thing.
Yeah, exactly. So he sees that there's more to come. So we'll certainly be watching what he's doing. You're listening to Bloomberg Radio and
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move to the final hour of trading on this Friday. We're on track for an up week. Right now, we do have stocks close to session highs, with the Dow up 397 points now, up 1.1%. S&P's up 35, up by 0.8%, while NASDAQ is advancing 77, up by about 0.5%. Traders moving into companies that are more likely to benefit from a rebound in economic growth amid a surprise increase in retail sales and solid corporate earnings. Treasuries fell. We've got the 10-year down 18.30 seconds, 10-year yield 1.57%. Equities rose even after data showing that consumer sentiment dropped in early October. Gold is down 1.6%, down $28 the ounce at $17.67. West Texas Intermediate crude up 1.2%, $82.25 a barrel. As for the economic outlook, Margie Patel is Senior Portfolio Manager at Wells Fargo Asset Management.
I think the economy is on track to continue to expand. I think the U.S. is going to be one of the highest growth countries in the world because corporations and consumers are in such good shape. We have consumers that have enough in savings that many people don't even need to go back to work. Corporations are washing cash, looking for things to buy. Those aren't the foundations for derailing the economy if the Fed knocks up short rates.
Margie Patel of Wells Fargo. The U.S. will open its borders to vaccinated foreigners on November 8th. This, according to the White House, granting access to millions of people who have been shut out of the country while closing it off to anyone who has not had their shots. A lot of travel-related stocks are advancing today. For instance, Marriott International up 3.3%, Hilton Hotels up 2.2%, Hyatt Hotels up now by 1.5%. Again, recapping, 10-year yield 1.57%, S&P up 34, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
This is Bloomberg Business Week, and we are live at the Stanford Graduate School of Business, having some great conversations with alumni, and we have an alumni in front of us right now. She's class of 2019. Valerie Shen is a partner and chief operating officer at G2 Venture Partners. So nice to have you here with us. And you spent 4 years here. 4 years here?
2.5. I wish it was 4 years, but it was definitely a great 2.5 years.
There's time to do your PhD if you want.
I actually think about that sometimes. My goal is actually to come back as a professor one day, so hopefully.
That's something we heard about earlier in our conversation with one of the professors. So tell us about your time here and how it really set you up for what you're doing now.
Yeah, so the most spectacular 2.5 years was spent here. I think what's really amazing about Stanford is you're constantly having great people paraded in front of you in the classroom, speaker series, your classmates, alum, and they've just done the most extraordinary things, and they're so transparent and honest about how they got to where they are today. And they almost always say, you know, I was just sitting there in your seat, I was actually skiing all the time. It makes you really feel like the people that are changing the world were just like us, and therefore there's no reason that we as students today can't be changing the world in the very near future. And I think that sort of just confidence that the GSB gives you is what carries a lot of us through the rest of our careers.
Well, I can't help but make the connection geographically where we are to the career that you're in now in venture capital. And I wonder to what extent you were exposed to venture capitalists being here in Silicon Valley during your time at Stanford.
I took a number of classes here thinking about entrepreneurship. I think what I learned a lot at Stanford was actually how entrepreneurs think. I didn't have that experience going in. I worked in venture capital, but almost all with people who came from banking or consulting, not from people who are on the ground. And then the classes at the GSB, you hear about what founders go through, actually how founders think about venture capitalists, and the things that often venture capitalists do that founders don't like.
So the other side of the coin.
Exactly. That was a perspective that I don't think I would have gotten otherwise from my job.
Well, how do you carry that over then to what you are doing now as you make investments in entrepreneurs and companies?
I think that I just always think about my classmates who are going through the entrepreneurial journey themselves and hearing about their day-to-day struggles and thinking about how we can be sort of less annoying venture capitalists, whether that's just making sure that you're responding to the emails in a timely manner, understanding which portions of our term sheet we should be careful about, because some term that we're just throwing in there is actually going to cause a lot of heartache to the entrepreneur. also just thinking about, our reporting requirements and whether that's going to be a struggle, and all the little things that we can be helping with, because the entrepreneurs are likely struggling with that.
When the companies that come to you for funding, or when you actually interact with these companies, when they do come to you, give us a characterization of them. Like, what excites you? What makes you want to say, yeah, that's something that we want to bet on. We want to bet our LPs money on.
Yeah. So the fund I work at, G2 Venture Partners, we invest in what we think of as the sustainable digitization of traditional industries. So in sort of...
Say what?
Yeah, exactly. Right.
I'm glad you said that, Carol, because I was like...
Yeah, it's a lot of words. Basically, we look at anything that's heavy asset, real economy based. So if there's something in that sector that you can drop on your foot and hurt yourself, that's something we do. Transportation, logistics, energy, anything that we think can substantially impact the pathway of emissions and environmental sustainability moving forward. And what we want to invest in is businesses that can change those sectors in sustainable ways, and businesses that can get really big and that have customers that love them. So that doesn't necessarily mean we're trying to count, like you're reducing this amount of carbon today and we're going to invest in the greatest carbon emissions. We're going to invest in something that works, that people love, that makes our lives better, and is also better for the environment. And as that grows bigger, our impact will get bigger as well.
Valerie, I have to say, I love talking with venture capitalists, whether it's early, angel, or moving it along, because I think you guys are seeing some of the stuff that's being thrown about that we are maybe going to be talking about as, part of our everyday life in 5 years or 10 years. What would you say that might be as you look at some of the investments you're making, or some of the investments that are put before you, that might be something that nobody's really talking about, but we probably should be watching closely?
One space that we're really excited about now is digitizing warehouses and logistics. I think it's a movement that people were thinking about a bit before COVID, but now has really been accelerated.
Is it really not digital yet?
So there's certain problems that are very difficult. For example, if you think about an Amazon warehouse, there's still so many people working there in jobs that are often, not that exciting, a little bit dangerous, a lot of probability that you're going to hurt yourself. And some specific problems, such as just getting a robotic arm to pick up an item,
right,
a specific small item, and put it in another specific bin, are surprisingly difficult, especially if you need 100% accuracy and you need to be doing it for all sorts of different shapes and objects. But as we can figure that out, and then figure out scanning, figure out last mile transit, so all the goods and services that we're ordering can get to people's homes. And then, by the way, when we return them, we want to make sure those return items are actually sent somewhere where they can be used, as opposed to just going directly to the landfill. So that whole logistics supply chain we think about a lot, and we think there's a ton of potential to reduce waste there.
Do you ever hear from founders in the area that there's concern that there's crowding out from some of the largest tech companies around? I mean, there's several trillion-dollar tech companies that have the resources to develop a lot of this stuff from within, or develop their own technology when they see a startup working on it.
You worked for one of them,
Yeah.
Google.
Yeah. I'm thinking about one that rhymes with Facebook.
Well, I think there's a couple of things there. One is, it is true that the big technology companies are thinking about a lot of these problems, but they can't do it all, right? Just the number of different things we could be working on, there's space for a lot of the startups. And then I also think the big tech companies are a great exit for a lot of these founders. So there's multiple paths now. You can get fully to the point where you're going to IPO, or maybe Amazon wants to buy you, maybe Google wants to buy you. Lots of potential paths.
All right, gotta ask you, because we have done the stories at Bloomberg about women in Silicon Valley, and certainly in the venture space. Not a lot of money going that way. Just got about 40 seconds left. What's been your experience so far as a woman working in venture capital that's still largely male-dominated?
I've had a tremendous experience. I work with great people. I've never felt discriminated, never felt that there's been any sort of issue.
But it exists, right?
I haven't found that any discrimination exists. I think the problem is just how you think about your family. Because do you want to, go at it all the way, and do you want to have a stay-at-home spouse, or do you want to really make the dual income family work? I think that's the biggest struggle for men or for women, as opposed to any specific sort of discrimination against me as a woman.
All right, so great to catch up with you. Thank you so much. Good luck with everything.
Thank you very much.
Hopefully we can check back again, because we'd love to hear more about your portfolio.
Thanks.
We've been talking with Valerie Shen. She is Stanford Graduate School of Business, class of 2019 partner, chief operating officer at G2 Venture Partners. But it is truly one of my favorite conversations, just trying to get an idea of what are the new things coming down the line.
Venture capitalists certainly understand, because they're the ones who are seeing this play out in real time.
Totally. All right, let's get back to world and national news. Over to Nancy Lyon. She's in our DC studio. Nancy, take it away.
Thanks, Carol. Nicholas Cruz, accused of carrying out the 2018 mass shooting in Marjorie Stoneman Douglas High School in Parkland, Florida, is apparently ready to change his plea in the case to guilty. His lawyer has indicated he would plead guilty to 17 counts of murder, 17 counts of attempted murder. The pleas would apparently come without conditions. Prosecutors still plan to seek the death penalty. U.S. consumer sentiment about the economy and its future, measured monthly by the University of Michigan, has fallen by more than a full percentage point.
It's been going that way for 3 months now, Richard Curtin, director of the survey, said in a Bloomberg interview.
Consumers remain rather pessimistic. Confidence has really declined in how consumers view the ability of the government to manage the economy. About the future of inflation, consumers have lost the notion that it will be transient.
At the same time, according to the Commerce Department, retail sales increased, but Curtin attributed that largely to the increase in prices. In Washington, Irv Chapman, Bloomberg Radio.
President Biden, while promoting his Build Back Better agenda at a child care facility in Connecticut, took time this afternoon to say he's been trying to get in touch with former President Bill Clinton, who's recovering in a California hospital after being diagnosed with an infection.
I've been exchanging calls. He seems to be, God willing, doing well. And so when I talk to him, I'll let you all know.
Clinton's spokesman says the former president is on the mend and responding well to antibiotics. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
So you are listening to Bloomberg Business Week, watching us on YouTube. Carol Master along with Tim Stanovic, live at the Stanford Graduate School of Business. This story, it's catching attention on the Bloomberg today.
Catching some attention and also making Bitcoin move higher. This by our own Ben Bain, Vildana Heinrich, and Katie Greifeld. Bitcoin futures ETF poised for milestone with debut in the U.S. The SEC, Carol, is poised to allow the first U.S. Bitcoin futures ETF to begin trading in a watershed moment for the crypto industry. This according to people familiar with the matter.
Yeah, absolutely. This is a Bloomberg exclusive. What's interesting and what we've seen certainly in the crypto space, and particularly when it comes to Bitcoin, we are seeing regulators, whether it's someone like a Jay Powell of the Fed saying we're not going to ban crypto. We're seeing the SEC weigh in that is really giving the legitimization that the crypto world has been looking for. It's a big first step.
It is, and as I mentioned, Bitcoin moving on this news. The currency, cryptocurrency, almost touched 60,000. That's the highest since April. Well, futures on crypto-linked stocks rallied in U.S. trading earlier today when the story came out before the markets opened. The largest cryptocurrency by market value has rallied almost 90% just in 3 months. It's closing out on that record high that it reached earlier this year of $64,869.
So what's going on is the regulator, we're talking about the SEC, not likely to block the products from starting to trade next week, according to those in the know. Unlike the Bitcoin ETF applications that the regulator has previously rejected, the proposals by ProShares and Invesco are based on futures contracts and were filed under mutual fund rules that SEC Chairman Gary Gensler has said provide significant investor protections. Again, we're talking about futures. We're not talking about the actual cryptocurrencies.
Yeah, of late, there's been a wave of futures-backed filings and unbridled optimism among issuers that approval could be imminent. The speculation, Carol, has fueled a torrential rebound in the price of Bitcoin, which has essentially doubled in price since breaking below $30,000 in late July.
All right, coming up, you're listening to Bloomberg Business Week. We're going to check in on some of the big banks, and we're going to hear actually from David Solomon of Goldman Sachs, certainly one of the big banks wrapping up the earnings season. Our Shonali Basak sat down and had a conversation. You are listening to Bloomberg Business Week on Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, and up Friday, we're on track for an up week. The Dow, the S&P, NASDAQ, all advancing. Broad rally. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are adding to weekly gains after solid corporate earnings and a surprise increase in retail sales. The Dow is up 390 points, S&P higher by 35, with the NASDAQ up 65 points. The U.S. 10-year yield is at 1.57%, and small caps are higher by 5 points. 7 of the 11 main S&P sectors are trading higher, led by gains in financials and consumer discretionary, while real estate and consumer staples are among the worst performers. NASDAQ biotechs fall 35, transports rise 265 points, semis add 20 points, while the VIX is lower by 5.2%. Leaders in the Dow, Goldman, American Express, and Caterpillar, while Walgreens, McDonald's, and Cisco are the worst performers. After earnings, Goldman Sachs rallied on a surprise beat for its trading business, and J.B. Hunt gained after third quarter earnings beat estimates. On the vaccine front, Moderna fell after a report the FDA is delaying authorizing its shot for kids, while advisors to the FDA backed a booster from J&J for people 18 and older. Wrapping things up, Bitcoin soared above $61,000 as the SEC may move to allow a Bitcoin futures ETF. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey, and to hear live breaking news over your Bloomberg Type Squawcast, QUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovic, live at Stanford Graduate School of Business. I'm going to jump right into it because we've got an amazing roundtable of students. And what's interesting is that one of the things that was part of the rankings this year was all about diversity. So let's get right to it because this was important. Amar Garza is with us, MBA class of 2022, born in Mexico and lived in the U.S. since high school. Mario Del Cueto is also with us, born and raised right here in California. And Stephanie Grayson, a New Yorker. So welcome to Bloomberg. So nice to have you here with us. Stephanie, let me start with you. Your experience at Stanford, diversity was part of the rankings this year. We're talking about it a lot in the last year and a half because of the pandemic, because of George Floyd. How important is it to you in terms of your academic experience, but also as you move beyond academia into your professional life?
I really appreciate the question because it's such an important topic and it's one that deserves more discussion. It's paramount. It's actually a driver of why I came to pursue my MBA as a Latina woman who is looking to build a career and lead an organization one day. I think it's essential that we learn not only how to lead organizations effectively, but how to lead and bring up others as well. It touches on a topic of championship, which is something that's a huge focus of the GSB. It's a huge personal focus. And I think that as co-presidents of HBSA, the Hispanic Business Student Association, it's something that we're really committed to furthering within our student community.
Yeah, talk a little bit about that, and Mario, I want to bring you in here. You're from California. You're a Californian here, so you didn't have to travel too far to get up here for your MBA. Give us an idea of what your experience has been like in the context of diversity at the school.
Yeah, I'd say my experience here has been very multifaceted between social, academic, career. I think one of the things that I've held the most dear to me is my involvement with the HBSA. And the opportunity that the GSB has provided us to really lean into our identity, to celebrate vocally, here is who I am, here's who I'm coming from. And in doing so, hopefully inspire others to celebrate their identities. And so that experience has been probably the most fulfilling for me here.
All right, Omar, last but certainly not least, we wanted to ask all of you the same questions first. I want to ask you about the conversations that we've all been having in the last year and a half. How is things like what happened to George Floyd, how is it the inequities that have been unveiled again because of the pandemic, how has it changed maybe some of the conversations you're maybe having with other students, non-Latinos and others on the campus?
Yeah, so I think it's very important to have open, honest discussions and conversations with people.
Were they not happening before?
They might have not been. I'm not exactly sure. Wasn't here. But that being said, I think it's important to be empathetic and really put yourselves in other people's shoes. And I think that's something that we've really been working hard to do. So whenever we have these conversations, it's all about empathy and really thinking about other people's perspectives. So hopefully we can come to a better solution.
Yeah.
So Stephanie, how do you want to take what you've been doing here at GSB and take it out for when you go for your summer internship this summer, and then ultimately when you graduate in 2022 and continue to pursue a career?
Yeah, absolutely. So I think that something that just is pervasive throughout the GSB is a focus on impact. And I didn't realize how acute that would be until I got here and just am surrounded by this cohort of future leaders, current and future to be honest, who are really committed to making the community and the world around us better. That has been critical in my experience, both from as someone who my past summer's internship at an impact investment firm, as well as an entrepreneur who I've been starting ventures during my time here at the GSB and really focusing on impact, whether it's in clean tech or upskilling. And I think that's an experience that I myself have had, but it's very pervasive across the broader community as well.
What matters most when the three of you go out looking for jobs, or you're taking interviews and you're talking to recruiters? There's lots of things that play into it. It can be the money, the company, the location, the experience, the diversity. Omar, let me ask you, what's going to really, and I know it's going to be a group of things, but is it going to matter if the group, you're not going to feel maybe comfortable that there aren't a diverse workforce?
Yeah, I think that's a great question, and that's definitely an important factor that goes into it. However, I would say that at this moment in my life, and I think for a lot of us, impact we care about a lot. However, we also care about getting to the position in life where we're able to even have a larger impact.
Right.
So that being said, I think I'm looking a little bit more towards, okay, do I like this job? Do I see myself growing as a person, as a professional, and as a person in that role? And then being able to continue having an impact, maybe even at a more elevated level later down the road.
Hey, Mario, what goes through your head when you hear executives, when they are criticized for not having diverse boards, diverse executive ranks, when they say, you know, we're trying, but it's a pipeline problem?
Yeah, that's a tough question. I think ascribing it to a pipeline problem kind of abstracts from some of the good work that some of these CEOs are already doing and some that others could potentially do. When I think about pipeline, I think the one way that we can get to a more diverse executive level is to be exemplars of success and business involvement. And so I think as we take it down to the three of us, I am kind of empowered and motivated to be the best version of myself to hopefully get to that point of bringing in more diversity to the top.
Next time we're going to carve out 60 minutes to talk with you guys, so hopefully we can do it again. We got to run. Omar Garza, Mario Del Cueto, and Stephanie Grayson. Good luck, everybody.
Thank you.
Thank you so much for the time.
Thank you so much. Appreciate it.
You're listening and watching Bloomberg Business.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, it's Bloomberg Business Week. I'm Tim Stenevec with Carol Massar, and we are coming at you live from the Graduate School of Business here at Stanford University, sunny Palo Alto.
We're telling the students, I mean, there's a lot around us. We're telling them to pipe it down.
And they take you seriously. They're actually walking away.
It's okay, guys. It's okay. Hey, coming up, we're going to do the chart of the day with Dave Wilson, and then check in with Shonali Bostic, who sat down with Goldman's David Solomon.
Yeah, a lot to look forward to coming up in the next 90 minutes. In the meantime, let's get a check of the latest when it comes to the trading day. Here's Charlie Pellet.
Thank you very much. And here's what's going on. We have got the Dow, the S&P, and NASDAQ all advancing right now. Let's talk earnings, though, right off the bat. Goldman Sachs up 3.8%. Alcoa surging 15% after last night's report. Heading the other direction, though, Duck Creek Technologies plunging now by 24%. Traders, though, piling into companies that are more likely to benefit from an economic rebound amid solid corporate earnings and a surprise increase in retail sales. Treasuries fell. We've got the 10-year down 18.30 seconds. 10-year yield right now 1.57%. S&P up 32, up 0.7. The Dow up 387, up 1.1%. NASDAQ surging 69, up by about 0.5%. Spot gold down 1.5%, 17.68 the ounce. West Texas Intermediate crude up 1.1%, 82.19 a barrel. The FDA, according to sources, is delaying a decision on authorizing Moderna's COVID-19 vaccine for adolescents to assess whether the shot may lead to a heightened risk of a rare inflammatory heart condition. In the U.S., the challenge is getting kids vaccinated. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
You know, I think the trend that we've seen with children ages 12 to 18 kind of mirror what we see with adults. There seems to be a good portion of the population that's very enthusiastic about this and will go out almost immediately and have their kids immunized. And another part of the population that is very, very hesitant and may not relatively soon or even with time get their kids immunized.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking those vaccine names, Pfizer now lower by 0.6%. Its German partner BioNTech, the ADR is down 0.8%. AstraZeneca's ADRs up 1%. Moderna out of Cambridge tumbling 3.3%. J&J Johnson & Johnson up 0.6%. Recapping stocks higher. S&P up 31, up 0.7. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
All right, so we're getting a little bit of Beatles, which is kind of nice. Can't get too much Beatles. Carry That Way, Dave Wilson?
Right. I mean, part of that second side medley, often called the long one on the Abbey Road album.
Ah, right.
Yeah, you got it.
This is a good connection, Dave Wilson, to the title of the chart.
Yeah, absolutely. It's all about carrying weight. And, you know, when we think about it in terms of companies and indexes, you know, the Dow Jones Industrial Average is sort of an odd duck in this world because, you know, they rely on what's called a price weighting, which basically means that the highest priced stock carries the most weight and vice versa. I mean, there's no adjustments for market value. There's no attempt to keep one company in line with another in terms of its weight. So it really is a matter of dollars and cents. And, you know, there's only one company in the Dow Industrials that has a price tag, or at least did yesterday, of more than $400. There are now two, with Goldman Sachs being up, but yesterday it was just United Health. And they had numbers out for their latest quarter that went over pretty well. The shares moved higher by more than 4%. And yet with that, you don't have United Health really carrying its weight in terms of the Dow's performance this year. Now, the average, at least through yesterday, was up 14%, and yet United Health accounted for less of that gain than 3 other stocks in the average. Goldman, one of them, the biggest share of the advance, and then Home Depot and Microsoft. Now, they happen to be the closest to United Health in terms of share price, which, at least accounts for some of that, but they've just been better performing stocks this year. Goldman, I'm looking at now up 54% for 2021. Microsoft up 36.5%. So, you get some idea from there. And it's just a matter of, kind of looking at how things sort of unfold. It was based on something I saw from Data Trek Research. Nick Colas basically complaining that it was 3 stocks lifting the Dow this year, Goldman, Home Depot, and Microsoft. And so now United Health is part of the mix. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Well, weightings are so important, Dave, especially when you look at something like the Dow, because there's just so few names in the index, and it's really important to understand the mix and composition and impact. Stock of the day, what do you got for us?
I've got PAM Transportation Services, to be more precise. Trucking company, the ticker is PTSI. No analyst coverage whatsoever. There hasn't been for months. Had results out late yesterday. And you want to hear some growth? Earnings up more than 12-fold from a year ago. Revenue up about 50%. It's the flip side of the story that we've heard from so many other companies about how their shipping costs are going up. And they're rising because of higher freight rates, which directly benefit a company like PAM, P-A-M. It uses the initials, but sounds like the woman's name, and the ticker is PTSI. And the results have sent the shares, regardless of whether the analysts are covered or not, up more than 20%. They've set a record in today's trading. They're headed for their biggest advance in about 18 months.
Wow. The stock higher too, Dave, by more than 125% so far this year. Absolutely been on a tear.
It's a doubling. That's a pretty big deal. All right, Dave Wilson, thank you so much. And check out Dave's Stock of the Day. You can find that, of course, on Facebook, on Twitter, and check him out on Twitter @TheOneDave. All right, you are listening to Bloomberg Radio, and this is Bloomberg. All right, well, right now, Bloomberg's Sonali Basak we want to get to, because she caught up with the head of Goldman Sachs. Goldman Sachs, by the way, their stock is on a tear today, rallying just under 4%, staying near its highs. But Sonali caught up with Goldman Sachs CEO David Solomon earlier on Bloomberg. And in this clip from the interview, David Solomon talks about the bank's quarterly earnings, of course, and about the outlook at the company. Check it out.
On the call with analysts a little bit earlier, you had also mentioned a series of headwinds. When you look at the markets that are ahead of us for the next couple of months, what concerns you most about what you're seeing?
Well, I highlighted in the earnings call that there are a handful of things going on that certainly lead to uncertainty. We are making progress with the vaccine. I did state on the earnings call that I feel like the worst of the virus's impact on the economy is most likely behind us. But we obviously have inflationary pressures, particularly around wages. We have an active debate around infrastructure spending and other fiscal spending in Washington, and potential tax increases. We've got a complex dynamic between the U.S. and China. There's still some uncertainty around the Delta variant. So all of that, leads to, potential headwinds. It doesn't mean that we will see headwinds. I think we're starting to see a more sustained economic recovery. But I think those are a handful of things that have to be watched closely as we move forward.
As far as inflation goes, how much of an issue is that going to be? And do you think that it will force the Fed to move a little sooner than many of the market expects?
I'm sorry, repeat the question, Sonali.
Sure. As far as inflation goes, I know John Waldron had spoken about it earlier this week, but do you think that investors are undercounting how much of an issue this is going to be, and will it force the Fed to hike a little sooner than people expect?
Well, I think there's no question that inflation is a topic that is front and center with every investor that I talk to, and certainly with every CEO that's running a business of any size or any scope. There's real wage inflation across all aspects of the economy right now. And there's certainly, because of supply chain constraints, inflation and other inputs to a whole variety of products and services. And so I think this is something to watch very closely. It's not baked in the cake as to how this will play out and whether or not it will be a significant issue as we go forward, but there is definitely inflation. We haven't seen it in a while. And the question is, what choices do we make from here? How will those choices impact how inflation progresses from here? Those are things that nobody has answers to, but I think have to be watched very carefully.
And you mentioned wage inflation. I know you talked about it on the call a little earlier too, but how long do you think across the industry this upward pressure on wage inflation can persist, and what can your own bankers expect from you?
Well, there's definitely wage inflation in all aspects of the economy. I think everybody that's running a business in some way, shape, or form has to adapt and adjust to that. As I said clearly on the call, we run a pay-for-performance culture, and we're very attuned to what we need to do to keep the best people serving our clients at Goldman Sachs, and I'm sure that we'll execute on that appropriately.
David, I've been mentioning it all morning. With $3 billion in equity trading revenue, that brings you past every single one of your peers. Do you think that you can persist that? Do you think that you will continue to be the #1 equity shop on Wall Street?
We have a leading equities franchise, and we're continuing to invest in digital platforms and other capabilities that can help us better serve our clients. I'm not going to speculate on a quarter-to-quarter basis about exactly where we'll be positioned, but I'm very confident that we have one of the leading equity franchises that's appreciated by our clients, and will continue to serve them well as we move forward.
And when you look for your hiring opportunities moving forward, which areas of the business do you think that you can continue to grow, or are there cuts that you are willing to make at this point through the end of the year?
We've highlighted very clearly in our plan, as I know you know, Sonali, that there are a handful of areas that we're investing in where we see there's an opportunity to really grow the firm and add more durable and recurring fee-based revenues to the firm's business mix. Those have most prominently been the build-out of our transaction banking platform, asset management broadly, with a particular focus on our alternatives platform. It's been wealth management broadly, and also our digital consumer bank. And so we continue to invest in those businesses. Broadly speaking, with respect to talent, we're always looking for extraordinary talent across the business. We've made hires in investment banking, in markets, in asset management, in consumer, in other parts of the firm, such as risk and compliance and legal over the course of the year. And we continue to look for great talent. There's always room for great talent at Goldman Sachs, and we'll continue to find people that we think can strengthen our franchise. We've made some phenomenal hires in the engineering space and continue to attract many world-class engineers to our platform, given some of what we're working on. So talent acquisition will always be a focus for us, and something's just core to what we do.
So return to office. Are you finding that more and more people are coming back now that the year is progressing? You had mentioned that remote work to you was an aberration, and do you still feel that way?
Well, we're definitely, I've actually said that, I've never said that remote work was an aberration. I was asked a question about traders, 98% of our traders working from home. And I said having 98% of our traders working from home was an aberration. I do think generally, and I've been very clear on this, for Goldman Sachs to effectively serve our clients and also to hire and retrain and attract all the young people that want to come work at the firm, we generally bring people together. We have a very collaborative apprenticeship culture, and I've been encouraged by the fact that more and more people across our offices around the world have been returning to office. We have always been extremely flexible with our high-performing employees and given them lots of flexibility to manage their life and travel and work remotely, which is a core part of our business. That continues, but fundamentally, we bring people together to collaborate, to innovate, and in particular to mentor and offer apprenticeship to our young employees. And I think we're on a positive journey there that's right for Goldman Sachs, and so we're going to continue to execute on that.
All right, that, of course, was Goldman Sachs CEO David Solomon with Bloomberg Wall Street reporter Shonali Bostic. Check out more of that interview. In fact, the complete interview, you can find that at Bloomberg.com and also on the Bloomberg terminal. What?
You know where I'm going. I'm just always interested in what everybody's saying about inflation, especially this week when we hear from these banking executives saying that, Solomon saying that inflation is a topic that's front and center with every investor that I talk to, and certainly with every CEO that's running a business of any size or any scope. There's definitely inflation. We haven't seen it in a while, and the question is, what choices do we make from here?
We've heard that from the other big bank CEOs. I mean, it was James Gorman saying we should have actually raised rates early next year. All right, certainly something we're going to continue talking about here on Business Week. Right now, though, let's get a check of the markets, and as we count you down to the close, let's get to Charlie Pellet.
I thank you very much. Here's what's going on. Goldman Sachs shares, by the way, rallying 4%, all about earnings this week. Alcoa reported last night its stock up now by 15.1%. We've got 13 minutes to go ahead of the closing bell here in New York. The Dow, the S&P, NASDAQ all advancing on track for a winning week. Third day of gains for the S&P. Traders are piling into companies that are more likely to benefit from an economic rebound amid solid corporate earnings and a surprise increase in retail sales. Among those companies reporting earnings, J.B. Hunt, the trucking company, J.B. Hunt Transport Services, up 8.7% right now. Schwab shares, they're up by 3.2%. S&P up 31, a gain of 0.7%. The Dow up 379, up 1.1%. NASDAQ up 67, that is a gain of 0.5. 10-year down 17.30 seconds. 10-year yield 1.57%. Spot gold down 1.5%, 17.68 the ounce. And West Texas Intermediate crude up 1.1%, 82.24 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 11 minutes left in today's trading session. We're counting you down to the close, driving to the close with Gina Martin-Adams on this Friday, Chief Equity Strategist at Bloomberg Intelligence. She is on the phone in New Jersey. Gina, you're in New Jersey. We're on the West Coast. I have to say, I got on my first plane ride in 18 months. The plane was crowded, the airport was crowded, and Stanford looks like everything is normal. There's just people out and about. The economy's reopened, and I feel like you can see that in the trade today.
Sure, and we see it in the earnings results as well, where companies are generally still taking expectations, growth on the top line still very strong and stronger than expected. Certainly, any risk that the economy was turning over that the market may have been imputing over the last couple of weeks is certainly gone to the wayside for the near term as earnings season has taken over the narrative for the equity market.
I think that's so interesting, Gina, because we've heard that these bank executives, pretty much every single one of them who was asked about inflation this week said, hey, yeah, this is something to be concerned about. This is something that's here to stay. And we're not seeing that show up at all when we look at the trade.
Well, I think that's a matter of opinion, frankly, because inflation is not necessarily a bad thing if it's supported by consistent growth as well. And I think that's the trade-off here, right, is for many weeks now we've been concerned about inflation ultimately degrading growth and ultimately depleting growth prospects, and certainly it's having an impact on margins. But is it so impactful that ultimately it reduces bottom line? That's the really big question, and I think that's a lot of the fear that was pricing, that we'd had priced over the course of the last few weeks, that financials, at least so far, have been able to say, look, we still have pretty strong growth, even in an environment where inflation is relatively strong. I think the other thing to consider is that financials are somewhat unique, right? Financials are an inflation hedge. So even if the bank executives are saying we're going to have inflation stick around for longer than expected, financials would be the natural outlet of positivity there. Financials and energy alike tend to perform best in an inflationary environment. So we'll see in the coming weeks if this sort of optimism is able to be maintained by the more growthy-oriented sectors where inflation could be more problematic. But I think there's a lot of nuance to what's happening with the growth and inflation story. It's really difficult to paint the market with an inflation brush or a growth brush right now.
Yeah, it's interesting, Gene. I know I feel like there's all of a sudden like this runaway enthusiasm thanks to the bank results, but it's really important as we broaden out this earnings season, right? What we hear from other companies about the outlook and how their business is going and how they are seeing inflation, whether it's transitory or something more significant. I mean, I'm looking forward to a wider swath of companies reporting.
Yeah, and I think it's a very good point that we've had 40 companies report so far. The bulk of them have been financials. You know, we're looking at less than 10% of the S&P 500 so far. So as much as it's been very positive, we want to, you know, maybe restrain our optimism for confirmation from other sectors. But nonetheless, I do think you want to watch the growth groups very closely. When coming into this earnings season, that's where the bulk of the downward estimate revision was in tech and consumer and industrials and very growth-sensitive groups, whereas the inflation-sensitive groups like financials and energy materials had less downward revision and even in many cases had upward revision momentum. So I think you want to watch those growth-sensitive groups really carefully. We'll get some next week in the form of healthcare companies. The bulk of those will come 2 to 3 weeks from now when we get, you know, very intense earnings season. But for now, the inflation hedges are working. Financials is working very well, certainly deriving some benefit from a widening yield curve. Would like to see a little more top-line growth for the financial sector, but nonetheless, generally the stocks are responding very positively to positive earnings results.
I don't remember who it was, Carol, who was on our show earlier this week. It might have been Dave Wilson who reminded us that banks don't have products waiting off the shores of Long Beach and Los Angeles right now. So,
it's a really good point.
Supply chain challenges for the large financial firms, Gina Martin Adams, that we've heard about aren't necessarily supply chain challenges that these other companies we're going to be hearing about in the S&P 500 over the next 2 weeks, no?
Yeah, exactly. And I think that the challenges on labor are very different as well. You know, what are the industries where you're hearing labor challenges and wage pressures? Very different. You know, again, I think that this index is starting to really bifurcate between the haves and have-nots when it comes to inflation, between the groups that are going to be able to survive in a faster inflation environment and the groups that are going to struggle in a faster inflation environment. Now, all of that said, as long as growth is solid, the market itself should probably do okay. It's just a matter of who wins and loses within that broader landscape that I think is becoming incredibly important.
So in other words, just rotation, Gina, right? Like we see this in market cycles, right? Depending on the outlook here, we are seeing maybe we will see some different rotation in the future.
Yeah, I do think it's largely a story of rotation. The one thing that I would say is a risk right now that we might be underappreciating is just the historical relationship between stocks and oil prices. You know, oil prices have jumped so far, so viciously quickly. We've had a bigger than 2 standard deviation move beyond average over the course of a year. That has only happened 5 times in history since the mid-1980s. Every time that happens, we get a pretty significant disruption of stocks. We were looking at average forward 12-month returns of negative 9%. So we need to absolutely have the growth to back this up to overwhelm what is a pretty disruptive move in commodity prices right now. You just don't see that kind of growth. And it's not like, you know, the moves in oil are coming off of extremely suppressed levels. Certainly they were really depressed all the way back in the spring of 2020. We made up for that pretty quickly. And we're still talking about 90% growth from this time last year. So really, really strong surge in commodity prices could be a bit of a canary in the coal mine that we want to watch pretty carefully here.
So Gina Martin Adams, connect that to the tech company earnings that we're expected to hear from in the next couple of weeks. We're going to hear, of course, from Netflix next week. What should investors be thinking about when they see the rise in commodity prices, specifically the energy crunch, in the context of these earnings?
Yeah, I think it's very difficult to connect directly. It's not like a materials or industrial company that utilizes the energy product in their direct production. But you can, through the chain, connect to tech earnings via interest rates. If commodity prices are spiking and that's driving longer-term interest rates higher, it probably depletes the relative value for some of these growth names that trade at large multiples and much larger than average multiples when interest rates are low, and creates a natural rotation to some groups that don't trade with such extreme multiples when interest rates are low and instead see multiple expansion as interest rates rise. And this goes back to the rotation point. In terms of earnings specifically, I doubt we'll have too much reference to commodity prices in the tech-specific groups, But I do think we want to be careful and watch for how much growth is deteriorating for these groups. I mean, as much as it seems crazy to talk about a full year and a half out of, peak crisis performance, the tech companies are still seeing slower growth rates coming out of 2020 and so far this year, and they're expected to see a continuous slowdown in growth rates into 2022, and that's putting them at this relative disadvantage in comparison to other groups as well. So I think the key for tech, the Netflixes of the world as well as the broader tech space is going to be, what's your long-term growth rate look like? Are you going to start to see a re-acceleration in growth, or are we looking at yet another quarter, 2 quarter, 3 quarter deceleration in the face of what is in a very strong growth environment?
Yeah, the trend line we've got to keep an eye on. Gina, thank you as always. Of course, our Bloomberg Intelligence Chief Equity Strategist, Gina Martin, is joining us on the phone in New Jersey.
It is 3:56 on Wall Street.
The following is an editorial from Bloomberg Opinion.
By the end of the year, the U.S., Europe, Canada, and Japan could find themselves with more than 600 million excess doses of COVID-19 vaccines. Meanwhile, in dozens of developing countries, less than 5% of the population has access to the life-saving shots. UN Secretary General Antonio Guterres has called this state of affairs immoral and stupid. And he's right. Rich countries have delivered only a tiny fraction of the more than 1 billion doses they've pledged to share with the rest of the world. They need to pick up the pace. In addition to donating vaccines, they should swiftly provide the $8 billion that the World Health Organization says is needed to store and distribute the shots. The longer the pandemic rages, the greater its costs will be, including for countries that have already vaccinated most of their citizens. This is about self-interest as much as benevolence. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast partners, Carol Massar and Tim Stenovic, on the road at Stanford University, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. Carol, just take it away here. Are you still in the shade? Did you give Tim an umbrella?
We got Tim an umbrella, and I'd love to talk with you, but I got to go to economics class and my VC class here at Stanford. I mean, what's interesting, I have to say, is just seeing so many people out and about. It feels quote unquote normal. I got on for a plane for the first time in 18 months. I mean, that reopening trade, Tim, we are definitely seeing it play out today.
Yeah, seeing it play out today, and we're also going to be ending the week in the green, guys, with the Dow, the S&P 500, and the NASDAQ certainly advancing. It looks like the NASDAQ going to be the major leader, higher by more than 2% over the last 5 days.
And celebrate, if you are someone from outside the US originally, November the 8th is when we start to allow vaccinated people in and out of the United States, and maybe we're getting on a few more planes. It's that consumer sentiment perhaps being buoyed. We're getting back, we're traveling, and you saw that in the retail sales.
And it was so interesting with that retail sales, Caroline. I love that you brought that up, because it was Olivia Rockman who said that this was in nominal terms. So you're starting to see prices pick up. How much of that was reflected in some of the retail sales data that we got this morning, even though 90 minutes later you started to see consumer sentiment again start to head lower, given some of these inflationary pressures that we continue to see.
And to your point, Caroline, though, too, I mean, it shows you kind of how mixed of a bag it is, because you saw American Airlines rally today, but then you saw some of the other airlines, particularly the ones that don't have that sort of European transatlantic exposure, fall on the day here. So there's still some concerns here about travel domestically versus maybe some of the bump in travel that we might see.
And oil prices, they're in.
Well, yeah, I don't know. How much does it cost to fuel up a jet plane? Do you know?
A lot, I would have thought.
Taylor, check that on the terminal here. Dow Jones Industrial Average higher by about 382 points. That's up about 1% here on the day. A pretty good day here for the Dow Jones Industrial Average. And look at the S&P 500. This is pretty significant here. You're talking about 4471, up 33 points, or 0.7%. That's above the 50-day moving average here. A 1.8% gain on a weekly basis. The NASDAQ Composite up about 2% on the week. That's on the back of a 0.5% gain here on the day. And the Russell 2000, keep an eye on this here, because it had been higher for a good portion of the day. It moved into the red as we got closer to the closing bell. Going to finish the day down about 0.3%, Carol.
Yeah, absolutely, and a pretty broad-based rally. When you look at the S&P 500, 3 stocks up for about two for every that were lower on the day. But what's interesting is really your standout group here were the big banks again. Those financials really roaring ahead. I know we're going to talk about those industry groups in just a moment. I mean, Taylor, those banks were really an outperformer.
Yeah, Carol, great point. Let's come and bring in for our radio audiences, we always do, the sector winners and the sector losers. As Carol was mentioning, banks clearly back on the top. You can pretty much overall say just stellar results from what we've been seeing. The banks are up about 2.4%, followed by the retailers. We've been talking a lot about retail sales today and consumers really getting back out to both goods and still some of those services, despite the flare-up of the Delta variant that we saw. Transportation's also in there. We talked a lot about J.B. Hunt earlier. That is up 1.4%. I'll just migrate quickly lower to the bottom of the screen. There are some red in the loser sector, but it's a lot of utilities, food and beverage, household products, some of those defensive stocks, Carol, that are the underperformers, at least on a sector level.
All right, let's talk about some of the gainers in today's session. I mentioned banks. I'm kind of beating the drum on that one. Let's go to it when it comes to Wells Fargo. We saw that stock really rallying big time, top among the S&P 500 and EPS beat. I will say the CFO, though, reminding us that the company still has a ways to go. Regulatory fixes may take a few years, but we saw that stock up about 6.8%. Let's take it to Goldman Sachs. Our Sonali Basak catching up with the Goldman Sachs CEO. Firm's trading business beating the forecast with a 23% revenue jump. Overall, 2021 revenue has already surpassed last year's results. I mean,
Are you in Stanford? You're in Stanford, California.
I am.
Well, I mean, why didn't you do a board with all the sort of companies based out there in Stanford? They've turned out a lot of big companies, right? Isn't Alphabet, wasn't that like Stanford alum?
There's Alphabet. Yeah, there's a lot. Well, they're busy right now, you know, but we'll get on them to bring them in.
Nike.
Hey, listen, just one thing.
HP.
Okay, you go on. I want to mention, because Caroline mentioned the travel industry, because of the U.S. opening up its borders, even more so for overseas travelers. Marriott was one of the standout performers in today's trade among the travel group. Tim, what do you got?
All right, well, you got the gainers, Caroline. I got the decliners. No Stanford connection, though, Romaine. I do want to talk about Moderna. Shares lower on the day today, finishing the day out by more than 2.3% over concerns from regulators that they had put the authorization of its COVID-19 shot for younger folks on hold over concerns about heart-related side effects. Myocarditis is the one they are certainly looking into. Virgin Galactic, you talked about a return to air travel. Well, how about a return to space travel? Not anytime soon for Virgin Galactic. Look at that. Shares finishing the day down by more than 16.8%. It's pushing the start of commercial flights further into next year after rescheduling a test flight. This is an unexpected delay to its space tourism business. Also, to keep an eye on Domino's Pizza, finishing the day down by more than 4.7%. We heard about the labor woes that Domino's Pizza had in its earnings earlier this week. Stevens, though, cut its price target on Domino's Pizza, citing the threat posed if those labor woes are going to continue.
Yeah, great Michigan company there. Did you guys go to the Giants game yesterday?
Oh, Romaine is so mean.
They lost, if you didn't realize. Tell you what's also lost on the day. On the downside, the dollar index off by 0.1%, the dollar down because retail sales were better than expected. We don't need this haven. We don't need the haven of the Japanese yen either, down by 0.5%. But get this, Bank of Japan also likely to pull back its growth expectations, its inflation expectations. The yen continues to sink to new sort of like 3-year lows at the moment. British pound gets a push higher. The Kiwi, though, also some of these commodity-related currencies pairs doing well. Why? Because we're still seeing Bloomberg Commodity Index at the highest since about 2015. We're seeing oil, we're seeing WTI up 1.1%, $82 is where we trade, $84 if you're looking at Brent. What was it, 8 straight weeks of gains we've seen on the WTI contract? We haven't seen that in years as well. As energy gets more expensive, think about the metals, zinc, aluminium, copper, all of them pushing on higher as, well, they can't be made at the moment, aluminium and zinc. Well, to a large extent, people are starting to turn off those smelters because energy has got so expensive. On the sovereign bond side, mixed old picture. Money moving into the 5-year Japanese bond, gilts, though money flowing out. Taylor, what have you got in terms of the US?
And what's so crazy is today's a total reversal of everything that we've seen this week. Yields are higher on the day, but take a look at what's happening on the week. It looks pretty much unch if you want to say that. What's interesting is for the 10s, we've gone from a 161 to a 157. You're actually falling on the week. Same with the 30-year yields. But Carol, what's so interesting here is the 2-year yield, now the highest since March 19th of 2020. How much of this are we pulling forward, some of these rate hike expectations? Even with the CPI and the PPI data this week, they came in, I think, by most measures, a little bit hot, and yet yields were falling.
Yeah, which doesn't make sense, right? We try to wrap our head around this. I mean, it's interesting. We just talked with Gina Martin Adams. It's going to be smart as we get deeper and deeper into the earnings season. And this plays to all the economic data today. You know, we've got to see what those CEOs have to say. I mean, here you have retail sales coming in strong, but consumer sentiment a little bit weaker. And I think about the conversations we've been having with Danny Blanchflower. What does weaker sentiment mean? He says we're already in a recession based on some research he's done. And so what happens in the months to come, Romaine?
Yeah, really pay attention, I guess, to those earnings that we get next week. I mean, you talk about not just the tech companies, but really it's a pretty broad swath of companies that we're going to get, including American Express and Chipotle, I think Southwest Airlines as well. Of course, Netflix and Tesla, which are kind of its own stories. But you got Halliburton, you got J&J. So you basically have a good broad representation here of the U.S. and really, to a certain extent, the global economy. So it'll be interesting to see what those CEOs and those CFOs have to say about how their businesses are holding up in this environment.
Yeah, I think it's important not to let the good week of earnings that we saw from financial firms this week really color the idea of what we're going to see from other companies. Gina Martin Adams reminding us, we've only seen 10% of S&P 500 companies report thus far, so there's a long way to go to really understand the most recent quarter and how those companies are thinking about Q4.
We've got Gina joining us in a minute, so don't steal all her fun day quite yet, Tim, but we will steal the thunder of Goldman Sachs CEO David Solomon.
I didn't see that, I'm sorry.
Well, interestingly, what you probably did see is Sonali Basak spoke to David Solomon at Goldman Sachs after their earnings came in. And I mean, again, a man who's speaking about inflation, whether it be, we've heard it from Dave, of course, from James Gorman and Morgan Stanley. He's talking about wage pressure. Take a listen.
The worst of the virus's impact on the economy is most likely behind us, but we obviously have inflationary pressures, particularly around wages. We have an active debate around infrastructure spending and other fiscal spending in Washington and potential tax increases. We've got a complex dynamic between the U.S. and China. There's still some uncertainty around the Delta variant.
David Solomon there of Goldman Sachs. Interesting he's bringing up China there because, of course, we're having plenty of data coming out of China on Monday, which is going to be a key for how much, what energy, what mining they're doing, and notably just how strong their consumer base is.
Hey, folks, just want to know, Caroline and Romaine, we're warming up California for you because I know we're going to come out. We're going to all be together at Milken next week out there in Los Angeles. So looking forward to it.
Yeah, absolutely.
Woo! All right, guys. All right.
Safe travels, everyone.
Woo!
Absolutely.
All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. Let's bring Taylor out, too. We'll see you again, same time, same place on Monday.
No, Taylor.
Not same place, different place.
She's been mean to me.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. President Biden is conceding that his Build Back Better plan will not likely pass Congress with its higher price tag. During a speech at a child care center in Connecticut, he also refuted claims that the cost for the plan is too high.
The cost of the Build Back Better bill in terms of adding to the deficit is zero. So when I hear people say it costs $3.5 trillion, and be honest with you, we're probably not going to get $3.5 trillion this year. We're going to get something less than that.
Biden and congressional Democrats are discussing how to scale back the larger social spending measure to win the votes of two holdout Senate Democrats, Arizona's Kyrsten Sinema and West Virginia's Joe Manchin. Manchin doesn't want a bill higher than $1.5 trillion. Well, the U.S. will be opening its borders to vaccinated foreign travelers beginning November 8th. Bloomberg's Amy Morris has the details from Washington.
It is the biggest change to U.S. travel policy since the pandemic began. The move is designed to open travel options for people who are vaccinated and clamp down on those who are not. Under the new system, vaccinated people with a negative test within 72 hours can fly to the U.S. as long as they share contact tracing information. Unvaccinated foreigners will be generally barred from entry. Unvaccinated Americans will need a negative COVID-19 test. In Washington, I'm Amy Morris, Bloomberg Radio.
Another vaccine booster received the nod today from an FDA panel of advisors. The 19 members on the panel voted unanimously to approve a Johnson & Johnson vaccine booster to be given at least 2 months after the first shot. This follows yesterday's approval of a Moderna booster shot. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
And you are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic, and we are live at the Stanford Graduate School of Business. This story, we talked about it earlier with Professor Schatz, and this has to do with Microsoft shutting LinkedIn in China, citing, quote, a challenging climate.
Yeah, LinkedIn said it made the decision in light of a significantly more challenging operating environment and greater compliance requirements in China, end quote. The company will close the current version later this year, LinkedIn said Thursday in a blog post. Remember a few years ago, Microsoft bought LinkedIn for close to $20 billion.
Well, and what's interesting, Tim, it's becoming the last major U.S. social media provider to pull out of the country, China we're talking about, and marking the demise of a rare U.S. tech success story there. This has been interesting. The social media space, certainly the U.S. social media space, has had a pretty tough time in China. Lots of rules and regulations coming from the Chinese government about what you can and cannot do, and they really want to see a lot of what the social media and online and digital space are doing. They do that with their own companies, and increasingly we're seeing that crackdown.
Right, so the company maintains Microsoft. It is a large research lab in Beijing. It sells cloud services through joint ventures with Chinese firms, and it was the first to market a video game console in the country, yet Microsoft has struggled to generate a significant amount of sales in China. It's also faced investigations by the government. The company has also been caught up in trade tensions between the U.S. and China, including around partner Huawei Technologies. I do want to make a quick correction. Microsoft acquired LinkedIn back in 2016 for more than $25 billion.
Well, and what's interesting, you're hearing, I think it was just in the spring, back in May, a prominent critic of China based in the a prominent critic of China based in the UK saying LinkedIn froze his account and removed content criticizing the country's government. So the latest in a series of allegations that the networking website had censored users even outside of the Asian nation to appease authorities in Beijing. This is the tricky thing of doing business in China.
The trickiest. I mean, it's not just Microsoft, right? It's Nike. You referenced that company earlier today. What about Disney? What about Apple, a company that makes and manufactures products in China, but also sells to many people who live in China? That's the big question. How are these companies going to continue to adapt or change their strategies as tensions continue to flare?
One of the conversations we've had here at Stanford when it comes to ethics and leadership.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Up week for stocks as we head into the weekend. S&P up today by 33 points, up by about 0.8%. For the week, however, the S&P rallied 1.8%. Best week since July as solid corporate earnings and a surprise increase in retail sales spurred a rally in companies that are more likely to benefit from an economic rebound. The Dow up 382, up 1.1%. NASDAQ up 73, up by 0.5%. Interestingly, though, a down day for the Russell 2000, falling 0.4%. Dow Transport's up today by 1.65%. 10-year down 17.30 seconds. 10-year yield 1.57%. Spot gold down 1.6%. 17.68 the ounce. West Texas Intermediate crude oil up 1.2%. 82.30 for a barrel of WTI. After earnings, Goldman Sachs up 3.8%. Alcoa surged 15.2%. But heading in the other direction after earnings, Duck Creek Technologies down 24.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol and Tim, and we're live here at the Stanford Graduate School of Business. And so great to have back with us Sarah Soul. She is a professor here of organizational behavior, also a senior associate dean of academic affairs. You oversee diversity, and we want to talk to you about that. But how great is it to have things kind of more normal?
It is absolutely wonderful, and it's so great to be here with you both again, and seeing our campus come alive as you're seeing now is such a treat and such a gift.
If you think about where we were 2 years ago before the pandemic hit, is this what it looked like?
This is pretty much what it looked like. I don't think we had very many people wearing masks, but this is pretty much what it looked like.
And are students wearing masks in the classroom?
Absolutely, 100%.
So what's it been like the last 18 months here? I've been saying I got on a plane for the first time in 18 months at an airport. The world definitely, is reopening. We're seeing that. What are some of the conversations, though, over what was a very difficult year? Obviously, the pandemic, kids learning, students learning, your student body virtually, but also some really tough issues, whether it was, racism, diversity. This is your world.
Yes.
What are some of the conversations that were coming your way?
Absolutely, and it was a very tough year, but it was a year of learning. We were so fortunate to have so many students, faculty, staff, and alums who wanted to help us as an institution get through the pandemic and also get through the divisions that were tearing apart this country with respect to race and systemic racism. So we were very fortunate, and the conversations that we had with our alums, with our students, with our faculty and staff were conversations that were geared toward our growth as an institution and towards us being better on the diversity, equity, and inclusion front.
You're also a professor of organizational behavior, and I'm wondering how your research, how your background, how your education helps you communicate with faculty, with students, and help them facilitate these difficult conversations in the classroom.
That's such a good question.
Well, and also connect it to the workplace too, please.
Yes. Oh, great. That's such a great question, because one of the things that we have that's brand new here at the GSB this fall is a mandatory training for all MBA students, which I'm leading along with one of my colleagues who's helping with some exercises. And it's allowed me to tap into some of my own research, but also research of many of my colleagues around issues related to implicit bias, to allyship, to thinking about how we can build a more inclusive culture here at the school, and so we can train our leaders to go out after they leave this program and lead inclusive organizations in an equitable way and to build diversity, equity, and inclusion into all that they do. So that's one of the new things that's happened, and that I feel very fortunate to be part of and allows me to draw on my own research and teaching. So this has been a wonderful new addition to our curriculum.
Professor Soul, Dean Soul, how do you, though, think that something's different, that we've talked about biasness and racism for decades, to be fair, hundreds of years, if you want to really think about it. How do we know that this time it's going to be different, that something's going to change in terms of actions?
Hope lives eternal.
I know.
Part of what I think is happening is that the new generation of leaders, those who have come to business school now, have have a different approach to this than I've certainly seen in the past. They're craving leadership in diversity, equity, and inclusion, leadership training in diversity, equity, and inclusion in ways that I haven't seen in the past. And so I believe, and I hope, I am an optimist, Carol knows that, but I believe and hope that this generation of leaders, the leaders we're training at top business schools and other business schools, are going to be the ones to carry forward these goals and make for a better, more equitable society.
How do you think about what you're doing on campus, attracting a more diverse student body? 1 year from now, 2 years from now, 5 years from now. Yes. What are your goals there? Can you give us any numbers?
That's terrific. So one of the things I think that you've probably read a little bit about is we've expanded financial aid in a way with our Bold Fellows program. We have 20 Bold Fellows this year, and we plan to enroll 20 or more, if we can, every year. And that's a new program of financial aid, which is specifically geared toward students who have had financial hardship, either because of less intergenerational wealth transfer or some sort of financial disadvantage. So one way that we're trying to, we kept hearing from students who had applied and had gotten in but couldn't come that the financial burden was too great and the risk perhaps too high. And so one of the things that we're trying to do is make it possible for students to come here, because we really believe that to train the next generations of leaders, we absolutely need a diverse student body, we need a diverse faculty, and we are absolutely committed to continuing our gains thus far in those areas. The other thing that we really need to do is diversity is so important to all that we do here and to our learning environment, but we also need to make sure that we are building an inclusive environment here where everybody feels welcome and feels like they can bring their best selves here. And so that's the other part of it that we're working on.
Sarah, just got about 30, 40 seconds, just quickly. I mean, how do you prepare, though, those diverse, you do have a diverse student body, you're trying to make it more diverse, but again, when they go out to the workplace, it's not always so diverse. How do you prepare them? And just, unfortunately, on about 30.
Yes, absolutely. My hope is that we'll be able to give them some of the tools to be able to build more diverse organizations, some of the ways to, for example, to intervene in implicit bias, teaching them how important it is and how doable it is as long as people have the will to do it. So that's one example.
All right, we're going to have to leave it there. Good luck with everything.
Okay, thank you very much.
So nice to just see things so much more normal. All right, that's Sarah Sewell. She's Stanford Professor, Organizational Behavior, Senior Associate Dean of Academic Affairs, overseeing diversity here at Stanford Graduate School of Business.
Love how it feels like it was in 2019.
I know, it's really
come a long way.
All right, we've got some good interviews coming up, some Stanford alums. Stick around here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening to Bloomberg Business Week on Bloomberg Radio, watching us on YouTube, also watching us throughout the day on Bloomberg Television. Coming up, though, we're going to show you and also let you listen to some of the interview we had with the head of marketing and communications over at Peloton Interactive. I feel like, Tim, one of the big stories of the past year and a half.
Oh, it certainly has been. We're also going to hear a little later from Jim Coulter, the ex-CEO and founding partner at TPG. We're going to talk to him all about markets and private equity outlook, get his thoughts on big macroeconomic trends.
And being greener, but we're going to get into that in just a moment. First up, let's get back to your top business headlines. Check in with Charlie Pellet.
All right, and speaking of being greener, look at the green on the screen. You can't, it's radio, but I'm telling you it's green. The Dow, the S&P, NASDAQ, all advancing right now. S&P up today by 33 points, up by about 0.8%. The Dow up 382, up 1.1%. NASDAQ up 73. That was a gain of 0.5%. 10-year yield 1.57%. Stocks notched their best week since July. On the week, S&P up 1.8%. Solid corporate earnings and a surprise increase in retail sales spurred a rally in companies that are more likely to benefit from an economic rebound. Treasuries fell with the 10-year down 18.30 seconds. 10-year yield 1.57%. Spot gold down 1.6%. 17.66 the ounce. West Texas Intermediate crude up 1.3%. 82.39 a barrel. This update brought to you by Witham. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit witham.com for more. Goldman Sachs posted a surprise jump in its trading business, rounding out a stellar quarter for Wall Street's biggest banks. Goldman CEO David Solomon talked with Bloomberg Radio and Television today, especially on the inflation outlook.
There's definitely wage inflation in all aspects of the economy. I think everybody that's running a business in some way, shape, or form has to adapt and adjust to that. As I said clearly on the call, we run a pay-for-performance culture, and we're very attuned to what we need to do to keep the best people serving our clients at Goldman Sachs, and I'm sure that we'll execute on that appropriately.
Goldman's David Solomon. This headline from the Bloomberg Professional Service. Square is considering building a Bitcoin mining system. Again, recapping, the Dow, the S&P, NASDAQ all higher. Goldman, as I mentioned, up 3.8%. Also surging after earnings today. Alcoa, it rallied 15.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Earlier today, we spoke to Dara Treseder. She's Chief Marketing and Communications Officer over at Peloton. She is Stanford class, MBA class of 2014. And we talked with her, Tim, right, about some of the challenges in working at Peloton. Check it out.
Well, it was an amazing experience because I've been a Peloton member before I actually joined to lead our global marketing team. And as a member, I knew how much Peloton was improving my daily life. So to take a role where I was going to be motivating millions of people around the world to stay active, centered, and connected, that was a real treat and a joy. So even though there was a lot going on in the world, to be at a Peloton at that time was so significant.
Yeah, you're also at Peloton at a really significant time right now. Certainly a challenging time, I think many would say, for the company. We did hear from John Foley back in August the idea that he wants to democratize the Peloton experience for all, essentially make it accessible to everyone. How do you communicate that value proposition to a large number of people? How do you get people to understand and communicate to them that Peloton is accessible for all?
Well, I think that, like John said, our goal has always been to make sure that many more people have access to fitness. And so communicating that has to do with making sure people see that Peloton is for people like them. And so we've been doing that by telling the real stories of our real members and having people see, wow, if Peloton really worked for that person, I can see that it will work for me too. If that mom can finally find, 20 minutes in her day to invest in her physical health, in her mental health, in her overall well-being, oh, that might be able to work for me too. And so I think that what's been really powerful about what we've been able to do is really communicate that. And then recently, we lowered the price of our original much-loved bike, right? We lowered our price by $400. And so Peloton is now accessible for $39 a month. So that, again, is another step and another action that we've taken to make sure that people really see that Peloton is something that they can bring into their lives and immediately start using to improve their physical health and their mental health.
Well, and Dara, you know, full transparency, I've got a Peloton, so just want to put it out there. You guys have also moved aggressively to digital, which lowers the price point for a lot of people. When you're trying to widen the brand, widen the access, tell us, as a marketing officer who's looking to really create strategies to broaden out the base of Peloton, how do you do it with the backdrop of the problems with the Treadmill Plus? We know that that is still an overhang on the company. How do you do it as the world reopens? Look, we're at Stanford outside with people, you know, gyms are reopening, and there's increased competition for the fitness world of pieces of equipment in your home. How do you do it with all of that?
Well, I think, you know, before the pandemic, people were using Peloton. And I think one of the things that really appealed to a lot of people was, wow, I can get an amazing workout, a great workout from the comfort of my home whenever works for me, right? Because there are live classes and on-demand classes. And I think what's been really amazing is the continued engagement with our member base, because our content team continues to put out really, really great classes, a wide variety of classes across a bunch of different disciplines, also incorporating a lot of music and entertainment. Like we recently launched our dance cardio classes with Usher.
Well, and it is interesting to see, you know, you guys are going into gaming, into corporate wellness, you're offering up different types of fitness options. But to speak to, and safe to say, you know, like I said, you are trying to widen the base and reach customers when you've got a product that's had, you know, the bad press and the problems like the treadmill. How do you kind of deal with that? Investors have certainly noticed the stock has pulled back about 40% so far. You are in charge of communicating, and I'm assuming even investors have got to be listening with you. So how do you kind of get beyond that? How does that make your job more difficult?
Yeah, you know, our North Star at Peloton is improving the lives of our members. That's what we focus on, right? That's what we get up every day excited about. That's what keeps us motivated. And I think continuing to show the myriad of ways that we are doing that. And so I think continuing to tell those stories and continuing to show how we're tangibly addressing these things, those are some of the concrete ways that we are continuing to push the business and the brand forward. Of course, like every business, we've dealt with our fair share of challenges.
Right.
That was Dara Treseder, Chief Marketing and Communications Officer at Peloton. You can check out more of that interview on the Bloomberg and, of course, at Bloomberg.com. Dara joining the firm at a very interesting time, given it was in the midst of the pandemic and also the struggles that the company faces right now. As we mentioned, the stock down about 40% so far this year. Let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by in our 99.1 newsroom there. Hey, Nance.
Hey, Tim. Johnson & Johnson's COVID vaccine booster received a key recommendation today from advisors to U.S. regulators. It brings the additional shot a step closer to clearance.
We do have 19 out of 19 unanimous yes votes for this question.
Ahead of the unanimous vote supporting the booster, the panel heard from Dr. Penny Heaton, who is with Janssen Research and Development at Johnson & Johnson.
In terms of safety, when compared to the single-dose regimen, the reactogenicity profile of the booster was similar. There was no increase in unsolicited adverse events and no new trends in any AEs of special interest.
Heaton did say the booster shot was effective against all the variants tested. President Biden has been in Connecticut this afternoon, where he's been pitching his economic agenda, including his social spending proposals. He says China and Russia are hoping the U.S. fails to find consensus.
Autocrats believe that the world is moving so rapidly that democracies cannot generate consensus quickly enough to get things done.
Biden says it's time to prove them wrong. The president also said this afternoon he's been able to speak with former President Bill Clinton, who is hospitalized with an infection. Biden says he's been cleared to leave the hospital. The former student accused of killing 17 people at Marjorie Stoneman Douglas High School in Parkland, Florida, is apparently ready to plead guilty. That's the word from the attorney for Nicholas Cruz. A judge has set a hearing for next week in which Cruz will change his plea in the case. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, right here on Bloomberg Business Week, live at the Stanford Graduate School of Business on the West Coast. Not too bad to be a whistleblower.
I was just going to say something about Stanford.
What were you going to say?
Well, I was going to say I'm surprised to see so many students here today because it's Friday, and traditionally many MBA programs don't actually have classes on Fridays.
You know this because you were in an MBA.
I was. I went to Columbia a couple years ago, and Fridays we didn't actually have classes. My first year we had a lot of study sessions.
Does that mean it was a deficient graduate?
It means Thursday night. It means, well, it's number 6 on this year's list, so I don't really,
It's pretty good.
No comment. But what I will say is that it also meant lots of partying on Thursday nights.
Yeah.
Lots of sleeping in on Fridays. And
I have to say, having gone to school in the city too, like your week pretty much ended by Thursday if you went to school. I mean,
but
the
we
weekend
didn't
started.
party off of campus. We just partied on campus. Yeah, we just partied on campus. Anyway, Carol, what I'm trying to say is that I talked to one of the professors about it earlier today.
Yeah.
And they told me that years ago the student body decided to vote to actually have classes on Fridays here because they thought it would be good for the community.
That is very interesting because it's really busy.
It is
very
really
social.
busy here.
There's a lot of activity going around. And that's interesting to see where students speak up about something and say, let's make a change.
Yeah.
All right.
Okay, now you can talk about the whistleblower.
I don't have a segue, a good one to whistleblowers. This story on the Bloomberg, it talks about the SEC awarding about $40 million to 2 tipsters whose information contributed to an enforcement action by the agency. First person getting about $32 million for exposing hard-to-find violations and helping identify witnesses. The other person getting $8 million for providing important details during the probe after waiting several years to come forward. But apparently they provided together some really critical information for the SEC.
Neither the whistleblowers nor the firms accused of misconduct, they were identified by the SEC. We don't know who they are. That's in keeping with the federal government's policy of withholding information that could reveal a tipster's identity. Since 2012, Carol, the agency has awarded more than $1 billion to tipsters.
Well, you think about some of these charges and these allegations, and they often get a lot of fines as a result of it. All right, you're listening to Bloomberg and watching.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story after ours. Jack Dorsey says Square Inc. is considering building a Bitcoin mining system that would be based on, quote, custom silicon and open source for individuals and businesses worldwide. Square shares after ours right now up by 1.2%. It was an up day and up week as well on the week. The S&P climbed 1.8%. The Dow, 2 winning weeks in a row, up 1.6%. NASDAQ this week, also 2 in a row, up by 2.2%. Today, the S&P advanced 33 points, up by 0.75%. Stocks had their best week since July as solid corporate earnings and a surprise increase in retail sales spurred a rally in companies that are more likely to benefit from an economic rebound. The Dow up 382, up 1.1%. NASDAQ up 73, up by 0.5%. 10-year down 17.30 seconds. 10-year yield 1.57%. Spot gold down 1.6%. 17.67 the ounce. Crude up 1.5%. 82.49 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we are here, of course, live at the Graduate School of Business, Stanford Graduate School of Business in California. And one of the interviews that we had, it was really great this morning, was with Jim Coulter.
Yeah, he is, of course, the co-founder, former co-CEO, TPG Capital, the Texas Pacific Group. And he joined us to talk what really he's focusing on now, so much when it comes to green, when it comes to the Rise Fund and impact investing.
Right, and don't forget, he's an alum of Stanford, class of 1986. Check it out.
Carol, somehow it seems like things always happen in October. So I'd say, while I'm a long-term investor, on a short-term basis, my advice has been strap in. It's going to be interesting and volatile. But at moments like this, as a long-term investor, I say double down on the long-term trends. And so we're spending our time thinking about what's going to be happening next year, what's going to be happening next decade, and making sure we position ourselves for that reality.
Are you concerned that some of the volatility that we're seeing right now could last into next year, could last into the next decade? I mean, I'm thinking about the tensions between the U.S. and China. I'm thinking about the story of transitory inflation. James Gorman and Morgan Stanley saying yesterday, hey, this is not transitory.
Raise rates.
Yeah. Tim, I've been doing this a long time, and one of the things I've learned is what's behind is not what's ahead. So we've been through a period of time that has been quite positive, extraordinary market returns and snapback. And so I think looking forward, we have to be prepared for more complexity. We have to be prepared for an era of alpha, not beta, and we have to get to work.
Well, what does that alpha look like? We are in this innovative, disruptive time. You've got the Rise Fund. You're thinking about, you know, certainly the climate, the impact, companies and technologies that play to it. So how do we think about that as an investor?
As an investor, I think we're going to be encouraged to increasingly wade into industries that are undergoing cyclical and secular change, whether it be content creation, cybersecurity, supply chains. There's a whole variety of broad themes that are coming in the post-COVID world, and my advice would be get in the middle of them, sort them out. That's where you'll find alpha. And for me, one of the key issues is climate change.
Mm-hmm. Well, what specifically in terms of how we play it? Because you could invest it in a major oil company that is starting to look at alternative energies. Maybe not your classic, you know, clean, you know, energy play. But so how do you think about it? You made the investment along with another in terms of Tata and their EV battery world. So how do you think about that specifically?
I think there's opportunities both in emerging technologies and companies and in helping existing companies change. What you just saw us participate in at Tata is a fascinating case study. Here's a major corporation that has a set of assets in EVs that are a market-leading position in India. And yet, in some ways, the market didn't quite understand that position. So the ability to drop those assets into a separate company, bring in capital from investors like us who are dedicated to climate change and making a difference, really has fundamentally changed how people are thinking about that business. So this opportunity to both support young and growing companies, something we learned in the tech revolution, and help existing companies spotlight their climate assets is, I think, a quite extraordinary opportunity.
You know, Tim and I were talking about and kind of planning for this about everything that MBA students. Tim, you have an MBA.
I do, yeah, from a couple of years ago.
In terms of what you study, leadership is such a big part in terms of getting there, right? So what is it that the MBA student today on Stanford's, here at Stanford or elsewhere, what do they need to be learning when it comes to leadership? Because I think it's safe to say that a lot of people would say leadership failed us in the last couple of years.
I think they need to learn to lead in a new era. Now, business changes every day, but there's times where business ethos change. When I got out of business school in 1986, a long time ago, we were studying Japanese business practices. In the 90s, the ethos changed to the Jack Welch era, where suddenly strategic planning and KPIs drove everything. 2000, it changed radically again, where suddenly we were told to move fast and break things. The era of entrepreneurship, where Stanford leads. Today, there's a new era, a new ethos developing. As I said, it's not only what you do, but how you do it. Some call it the ESG era. Some call it responsible capitalism, stakeholder capitalism. We don't quite know the name, but it's real and it's happening. So Stanford has an opportunity to continue to lead and prepare business leaders, societal leaders for that new era.
Jim, there is this conversation happening right now about the value of education, especially really expensive education. So make the case to us, to our viewers, to future MBA students that the MBA is still worth it.
Yeah. For me, in 1986, I walked out of Stanford, and it was a special place then. It remains a special place today. There's something in the air, ideas, innovation, risk-taking. And at that moment, I chose to take the lowest paying job I was offered. I entered an industry that didn't have a name. Fast forward 30 years, that industry is now called private equity. It's $4 trillion. I've helped build organizations within it. And today I'm sitting here talking about how to drive a new idea, impact investing. So Stanford's motto is change lives, change organizations, change the world. It changed my life. It allowed me to change organizations, and we're working hard on changing the world. That has immense value. It doesn't play out necessarily always in year one, although it did for me, but it plays out over the arc of a career.
Jim Coulter, of course, executive chairman, founding partner of TPG. He's also co-managing partner of the Rise Fund. Really thoughtful conversation and really stressing the impact that Stanford had on him and his trajectory to where he is today.
Fascinating to see how much money they've been able to raise in such a short time for the climate-focused impact fund.
But there's so much money we know going into that ESG space.
I mean, it was the second quarter of so much money going into ESG, also into private equity. If we think about the second quarter of the year, KKR had that record quarter, close to $60 billion.
That full conversation, by the way, you can catch it at Bloomberg.com, also on the Bloomberg terminal. There were some themes, I think, diversity, inclusion, certainly talking about the ESG space, even talking with the venture capital world about what's going on there. But some of some of the themes that we're hearing and certainly being studied by the students here, I gotta say, it was a fun day to be on the ground.
It was a great day, and also a great day to see students back in action.
Totally.
Really thinking about the other side of the pandemic. Many of our guests making the case to us about why in-person learning and and the importance and value of an in-person MBA.
And we're not done yet, folks. We've got the Minted founder and CEO coming up, so we'll get to her in the next hour on Bloomberg Television, so you can check that out. And then next week,
we're headed to Beverly Hills.
The Milken Institute. 3 days of programming, live broadcast, so we hope you'll check us out. In the meantime, let's check out Joe Matthew, host of Sound On, coming up in just a moment on Bloomberg Radio. Joe, what's coming up?
You guys never want to come to Washington. That's all I'm thinking, sitting here listening to this.
We'll get there.
Like, what a tour you guys are on. By the way, you look just gorgeous on TV, and I've loved listening to this on the radio for the balance of the day. We're going to get into energy prices, energy policy coming up with Tom Closa, the Dean of Oil Analysts, next on Sound On.
All right, stick around, everybody.